Hey everybody, it's all falling apart still. We had a really good weekend, took a break from the news, and now there is a multitude of it. We've got these house flippers, these Ibuying houses are starting to really show some pain as the interest rates start to creep up. They're no longer creeping up. They're talking about a whole point, raising it a whole point. What, next week?
It's supposed to be this week.
This week?
He's supposed to come out, I think, this week, is it? I think that's what they said.
There's a lot of evidence here, so check it out. And that is the accurate gold and silver price. As it's going down, we're having a lot of people take advantage of it, so good for you guys.
Oh, well, let's talk about this Ibuying. This company, Open Door Technology Incorporation, they have a program where you can get online, submit an application, they buy your piece of property, they maybe do a minor repair or two, and then they turn around and they sell it. But they pay you cash, right? Isn't that what you read?
Right. So there's some, at the beginning of this article, it's called Home Flipper Open Door. Okay, they're not really home flippers. I'm going to read you a little bit of what's going on, and you'll have a better understanding of it. Here it is. Common misconception about their business. Home flippers aim to fix and flip homes. They're talking about home flippers like what we do. For maximum price appreciation. Their business model is to buy low and sell high, whereas our model is to make an offer and provide a service in exchange with a charge or a fee for that service. The service we provide is the certainty of an all-cash offer. So what they're doing is they're just kind of skimming the cream.
Yeah.
They're getting those really good deals on houses. They do bare minimum fix-up and just flip them, but really just turn them really quick,
right.
pop. You know, they'll buy something for $1 million and ask 1.1 or 1.2 or whatever. So that is very different, but they are getting caught with their pants down as this economy is crashing.
Yeah, unfortunately they are. So it said the shift caught Open Door by surprise, leaving them to where they had to offload thousands of properties that they had agreed to purchase when prices were rising and now prices are down. They had to go to their investors and tell them in the month of August, apparently, they to expect to lose $170 million in adjusted earnings before interest, taxes, and depreciation and all that. The company's shares slid 5.9% to $3.82. That was today. That was a few minutes ago.
And yeah, just a few hours. It's probably about to get worse. These kind of, like Zillow, you know, they started crashing, and the economic engine was saying they would, and he called that right.
Yep.
And we had some rental properties for sale, and I actually reached out to Zillow as they were doing that, and they would not buy ours for some reason. And ours were in better shape than what they were buying, but it was in the wrong area. So these people it's really starting to show up. The collapse is starting to happen in the housing market. And I haven't heard anybody in the comments tell me it's not going to happen. Somebody please tell me I'm wrong. I would appreciate that.
Well, you did a few months ago, but they never came
forward.
no,
it'll never go down. No, I can straighten you out. I'm still waiting on that.
So not only are we having housing prices like this, we're having home builders. So their confidence is going way down. And there's a poll or like a number that they if they fall below 50, then it's considered extremely poor. And they've hit 59, I believe that is.
49.
That's right, sorry, 49. They have hit 49, and it's declined every month. And this entire year, they said it's the longest stretch of declines in the data back to 1984. They said their builder confidence index, that's what it is, it's an index, has dropped to 49 in August. Anything below 50 is considered poor. The 49 point is back to 2014 levels and even below where it set in 2006. So we're low. They can't get money where they say they're having high cost of labor, maintenance, land, all this cost.
Yeah, can you imagine how costly it is to build a house right now? Labor's hard to find, lumber's expensive, every appliances, all that stuff is getting hard to find and more expensive.
Yep.
This is the beginning, or this is stagflation with high inflation.
And interest rates, higher interest rates too.
And wages aren't keeping up.
Yep.
And it's really starting to come down, and it's starting to be noticeable, this recession that we're not supposed to be in because they've relabeled recession. But the home builders are on the front lines. That's why we really need to pay attention to those guys.
Yeah, and unfortunately, I've had some buyers that were wanting to build. They completely scrapped their plans. And not even some of you guys, some of the subscribers have even called in and said that you guys were planning to build. You've scrapped your plans because the prices are so high, and the builders kept changing the prices on you, and finally you guys just said enough, and you either just stayed where you were, which that's a lot of people are doing now. They have so much equity in their home, and they have low interest rates, and so they said that even trying to get someone to sell now is going to be impossible, even if you wanted to buy. And not only that, don't even talk to me about, don't get started on the variable loans. The variable loans have gone up over the last couple of years, and I looked it up. In the United States, we're pretty high, but man, some of these other countries are very high, and they're about to get hit hard once that variable rate stops, and they have to be their increases. They said they won't be able to afford it. They said these new families that have bought these homes, they're going to get hit hard.
This is a really different situation because the demand is still there for houses.
It is.
The supply is not so much there. What is it around here?
It's starting to go up. Seems like a little
Supplies
bit in some
going
area,
up.
but the problem they're having is nobody wants to sell because their interest rates are so low. And if they sell, even though there's equity in their home and they make money,
Sure, you can't find a good interest rate.
Yeah, get that B. You can't find another home, and then you're going to overpay for it. You're going to pay too much for it, and then you're still going to be upside down. So
This happened in Germany, by the way, in the Weimar hyperinflation. And I'm not saying we're there. We're not in hyperinflation. But as people's assets appreciated, especially their home, they saw the prices going up. They sold only to be left homeless because they couldn't find another home because the prices kept going up.
yeah.
So, it's kind of the same, but not really. Keep going. This is really interesting.
I'd like to hear what you guys see, like in your neighborhood.
Absolutely. We learn so much
Yes.
from the comments. If you guys are not in the comments, get in there. Make some noise. I read every one of them. I might miss some. If the video gets old, I don't get back to it. But when it's hot off the press, I try to get to every one of them. I read them.
Yeah, it's great. We learn a lot. So the global race to hike rates is tilting economies toward recession. So the Fed and other countries and other banks, they are willing to tip the U.S. and the whole entire world, it sounds like, into a slump if that is what is needed to beat inflation. Other central banks said they are ready to make that gamble also. Late to see the worst inflation in 4 decades coming, and then they were slow to crack down on it, but now the Federal Reserve and its peers around the globe make no secret about their determination to win the fight against soaring prices, even at the cost of seeing their economies expand more slowly or shrink.
That's what they're saying now.
Yeah.
But wait, I think they're going to chicken out and make the decision to pivot and
Really?
do whatever I do.
Okay.
When things get bad enough and people are killing themselves, literally committing suicide because they're losing everything and everything's bad, I think they're going to start printing money again. That's why it's so important to take advantage of gold and silver prices. Not only gold and silver, other assets, whatever asset you like, whatever you think is going to do good, food, whatever. A wood stove will probably bring a really good price in the future. Those things are going to do really good when they flip. When this thing flips over and they say, hey, we've crushed the economy enough. We've cured inflation because we killed the economy. That's what's going to happen. That's what it's going to take. When they go the other way is not the time to be buying precious metals. That's the time to be watching to see how high they're going to go and selling your assets that you've accumulated as the prices have been going down.
Okay, so I'll pick your brain a little bit on that. So you think they will lower interest rates, or do you think they'll just print money and do stimulus? Or, I mean, how does that work into that? Because I've tried to look at that and figure out, because some people said that they think they'll pivot and they'll start reducing interest rates a little bit because it's going to affect the economy.
It's the same thing.
It's
the same thing. Quantitative easing and negative and lower interest rates is still quantitative easing. It's like you're taking pressure off the economy and you're helping it, whether it be through money printing out of nothing or zero interest rates.
I just wonder which one would look the best to the citizens.
Free money always looks good to citizens.
help.
Everybody wants
free
money and nobody wants inflation, and you can't have both. You can for a short amount of time, but eventually it leaks into the economy and asset prices go up. Mm-hmm. And this is working really good for the Fed. They're able to bring asset prices down. They can absolutely crush the economy, bring the asset prices down. But the problem is when they do that, it gets out of whack. They don't. It's not like they're going to just pull it back a little bit, run it back, and then let it come down. Oh, stop right there. Let's stay right here. No, it's going to go like it's going to keep going down, and then they're going to make another knee-jerk reaction, overreact, and stimulate into the stratosphere, however it may be. And we're into a very volatile environment where we're going to pass where they want to go, and then they're going to pass it where they want to go this way.
Yeah.
So try to take advantage of those dips. Right now we're in the descent of one of those dips, and I hope people are taking advantage of it.
I'll give you 3 more quotes, and then we can go from there. Jerome Powell, he has said, we are going to have to bring some pain to households and businesses. And the European Central Bank has called it a sacrifice ratio, where they're going to have to do what they need to do, and everybody else is going to have to sacrifice. They call it a sacrifice ratio. The BlackRock, their analyst has come out and said that what they're trying to do, the Federal Reserve and the banks across the world, would mean a deep recession and 3 million more people are going to be unemployed.
That's what I like to watch is the unemployment number. And even though the jobs that are going on right now that are supposedly, strong jobs market aren't very good jobs. Nope. And, it takes a whole family's got to work to support the family. It used to be where the man would go out. A carpenter. My grandfather was a carpenter, and they had a good life. A carpenter could support a family of 5, and the mom stay home and take care of the kids and do like we're supposed to do. But now it's so out of friggin' whack. Everybody's got to work just to scratch by with this good job they've got. So,
well, people aren't working though, Chris. We just did a story about it the other day about the government has like over 1 million positions and they can't even fill them.
Yeah.
So people aren't working. Are they sitting home with unemployment checks? Because I haven't seen any of that. I mean,
and put that with the quiet quitting and all of the above. It's just the collapse. We're in it.
It's a mess.
It's starting to happen, and we're starting to see it all over. It's just like people aren't wanting to work. Go back and look at When Money Dies. Yep. Go read the book When Money Dies. It's all been done. It's a playbook. The politicians are saying the same thing. The citizens are reacting the same way. It's a little different because it was 100 years ago, almost to the date.
Yep.
Because we're in this 100-year cycle.
Well,
here we are.
Dalio, we just watched the video of him, and he just nailed it. He said he screwed up in a few incidences, and the reason why, he says, he did not study history. And he went back and studied history, and he said everything's been done over and over if you just go back and watch what's happened. That was a really interesting video.
Yeah, it is really good. He's got some quotes in one of these.
Yeah, he does. I'd have to find it. I don't remember where it was now.
Well, we can find it later.
But anyway, that was a really good video.
Okay, I'm not going to look anymore. Guys, have an awesome day. As we get into the collapse, we're going to keep making these videos and keep trying to keep people posted on how things are unfolding because they are right in front of our eyes. We're living through history, and it's happening now. So it's going to be exciting. Try to take advantage of it everywhere you can. If you cannot be part of the problem, you'll have the opportunity to be part of the solution. So have an awesome day. Later.